Hello guys, as usual, I'm coming today with another explosive video. By the end of this video, I promise you the ideas you get from this video today are gonna blow your mind, and they're gonna change your perspective completely when it comes to Forex trading, because in this channel there's no BS, there's no game, we go straight to the point. But before I go into that, before I go into the card, guys, thank you guys so much. Thank you guys so much for 10,000 subscribers. Let me get a drum, please. Let me get a drum. Let me get a drum. For what? 10,000 subscribers. We started this channel just about 4 months ago, and today we are already above 10,000 subscribers. We hit 10,000 subscribers about 2 days ago. Today we are already more than 12,000. We are already heading to 12,000 and going to 20,000. By the end of the year, we'll already be above 50,000 subscribers. That is insane. We've been rated as one of the fastest growing YouTube channels. Why? My channel wouldn't be growing if you guys were not getting something from my content. If my content was not unique, if my content was not changing life. That was the impact of my channel, to impact life, to bring a new perspective when it comes to Forex trading. So guys, thank you guys so much for subscribing to my channel, for liking my videos, for commenting on my videos, and for sharing my videos. One thing I'm going to be talking on today's video is something they call trend trading. All right, because in Forex trading, 90% of the time when I see on YouTube, people they tell you support and resistance, they just say, okay, they show you 90% of the time, they teach you what they call sideways, a sideways market or a ranging market, but they fail to tell you about trending market, or they fail to teach you on how to trade with the trend. Because anytime you try to trade against the trend, it's like catching a falling knife. All right, it's like somebody throwing a falling knife and you are catching a falling knife, or it's like you are trying to swim upstream. It's like the water is flowing downstream and you are trying to instead swim upstream. So you have to be able to swim downstream. You have to be able to go with the flow. That is why on today's video today, I want to teach you on how to trade with the trend. This idea is life-changing. Stick to the end of this video so that you'll be able to testify with me how this concept is going to be able to change your whole idea when it comes to Forex trading. So let's see what we have on our table of content today. On our table of content, we're just going to be going straight to the point. And the first points we have here, we're going to be covering. Let me centralize this. The first point I have here, they say we're going to be covering what is a Forex trend. Because you hear of trend trading, you hear of following the trend is your friend. So what is Forex, a Forex trend? That is the first thing we'll cover. And then how do you identify a trend? You don't need any indicator. You don't need to. I even see, guys, this is crazy. I even see people going to an extent of buying an indicator to determine a Forex trend. That is so stupid, guys. Because this thing is very, if you bring down yourself and study this thing, you see that the indicators that you're buying, they even lag behind. That means the indicators you're buying can't even show you what you can use your brain to read. And I'm going to show you by the end of this video. All right, you don't need any indicators to do what I'm showing you on this video. Even on my live videos that I trade, even on my $10,000 or $20,000 account profits video that I make on live camera, withdraw on live camera, 90% of the time you guys see my charts are clean, no indicators. Because I trade as raw as it is. I learn demand and supply and demand zones, price action, trend trading, fundamentals, economic. So that is the goal of this channel. And the reason why the channel is exploding, the reasons why this channel is one of the fastest growing YouTube channels is because of things like this. It's because I'm bringing you guys things you won't see anywhere on YouTube. All right. So please stick to the end of the video and you'll be able to tell me on the comment section how this aspect was lacking on your trading. So we'll talk about how to identify the trend, and then what are the 3 types of technical trends, because in Forex trading we have 6 types of trend. I see on YouTube, I see even on Google, on Twitter, everywhere they talk of 3 types of trend, but there are 6 types of trend. 6 types of trend. So we're going to talk about what are the 3 types of technical trends. This is the most important thing, technical trends. All right. Then we'll talk about what are the 3 types of momentum trends. Guys, let me know if you've ever seen anywhere on YouTube or anywhere on Google somebody even talking about momentum trends, but they are momentum trends. And it's high time you understand how to use momentum trends so that you can be able to utilize and pick out some of these awesome signals. So talk about momentum trends. Then what is the best Forex trend indicator? I did talk about the best, although there is no indicator, there's no best Forex, but I'll also talk through line on that. And then a killer way to determine trend, because what I want to talk about here is trend. All right, trend. That's the strength of the trend. That is what I want to also talk about on this particular point. Then how do you determine trend reversals? How do you determine trend reversals? Because the high time you're able to easily spot trend reversals is going to be very advantageous on your part, because you'll be able to shift out a lot of fake signals. So how can you easily identify fake or identify trend reversals in Forex? Then tips on how to trade the trend. So tips. We'll also talk about tips on how to trade the trend. So with that being said, let's go. I don't want the video to be too lengthy because I want to be able to pass the point to you guys as soon as possible. I can't wait to get to those awesome points. Let's get to the first one. What is a Forex trend? As simple as that. So a Forex trend is just the ability of price. See, what is a trend? You see every day people talk about an uptrend, a downtrend, sideways market. So what is a trend? It's just the ability for prices to move in a particular direction, all right? The ability of prices to move in a particular direction over a specific period of time. As easy as that. The ability of prices to move in a particular direction over a specific period of time. So it's either the prices are moving in an upward direction, or the prices are moving in a downward direction, or the prices are moving in a sideways direction. Those are the three technical trends we have in Forex. And that is just the definition of a trend. Nothing more to that. A trend can either be an uptrend, a downtrend, or a sideways trend. Those are the kind of things we call technical trends. All right, let's go to the next point. So I hope you are taking down these points, guys. We've already spoken about the definition. Let's go on how to identify a trend. These are like the basis of price action trading. All right, now the basis of price action trading, and you need to be able to master this. So how do you identify a trend? Anytime you open your MT5, it's very simple if you just get it this way. Anytime you open your MT5, if you just look at the chart, guys, if the chart is going up and you know how to identify support, you know how to identify trend direction using this formula, you don't need any indicator. You will never need any indicator in any market to determine the market direction. And I'm going to show you after this. I'll show you that on a live chart. All right, so this is the formula. Anytime, for example, you can see this is an uptrend. All right, this is an uptrend. And anytime for you to determine whether it is an uptrend or a downtrend, this is how you do it. You pick the first point on your chart. If you see the market sloping upward, you pick the first point on your chart, and it's obviously, since it is an upward trend, it is going to form what we call higher lows. All right. Remember, it's an uptrend. It's an uptrend. So the first swing low, this one stands for what we also call swing. Stands for what we call swing low. All right. So the first swing low is what you call higher lows. Let me put this very small, since I don't want to. Let me make it very small, guys. Just a minute. Good. So this one is what we call swing low. So higher lows is what we call the swing low. Then when the market forms a swing low, then change the direction and form another high and form another swing. You call this one now a swing high. All right, a swing high. So a higher height is the same as a swing height, and a higher low is the same as a swing low. All right, and anytime, so if the market comes down again and form another higher lows, if the market is forming higher lows or higher heights plus higher lows, or swing highs plus swing lows, it forms what we call an uptrend. As simple as that. There is no other explanation anybody will give you when it comes to this. That is just the basics. If the market is an uptrend, it's going to be producing what we call higher highs, higher lows, higher heights, higher lows, or swing highs. It starts with swing highs, swing highs. You can see those are the spellings. You can see them down. So if the market is an uptrend, it will be forming what they call swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. It's the same thing. Higher highs is the same as swing highs. Higher lows is the same as swing lows. So higher heights plus higher lows is equal to what? An uptrend. As easy as that. And here you can easily see, for you to draw your support and resistance now, I've already explained. If you didn't watch my previous videos, you wouldn't be able to understand much of what I'm talking about now, because the previous videos were like the basics of this. So now, how can you easily draw your support and resistance in this kind of market? You just link all the heights and you link all the high heights and you link all the high lows. As easy as that. For example, where is this resistance? The resistance here, I'm just going to link the higher heights, high height. From year to year, higher height, higher height, higher height. That's my resistance line. As easy as that. That's my resistance line. Then where is my support? My support line, I'm just going to link my higher lows, higher lows, higher lows. This is my higher lows. And where is the other higher low? That is it. So what is this? You can see that is my channel. This is what they call a channel, an upward channel or an uptrend channel. And it is bouncing from support to resistance, from support to resistance. This is how you plot your chart to determine the market direction, and that is how you also link the higher height, or higher lows to get your resistance and support respectively. As easy as that. You can see I've moved from a raw chart to determine the market direction of that particular chart, and to also determine the specific or the sniper, when I talk of the sniper support and resistance level of that particular line. The same thing holds if the market is a downtrend. If the market is a downtrend, just looking at it, if you just look and any market is sloping down, the first swing low you have, this one is equal to the swing low, all right, swing low. The first swing low you have is called the lower low. Since the market is going down low, the first swing low you have is what they call the lower lows. And if it forms another swing high when the market is going down, if the market is going down and it forms another swing high, it is called the lower high. All right, it is still called the swing high, but this one is called the lower height. All right. So anytime you see lower low plus lower height, it forms what? A downtrend. As easy as that. As easy as that. That is the highest explanation anybody can give you. If you master this, you're going to use it for stocks, you're going to use it for indices, you're going to use it for commodities, for metals, for Forex, anything tradable, all right? Anything tradable. So that is how you also determine your market direction if it is a downtrend, all right? And if it is a sideways market, you're not going to be able to have lower lows or lower highs or higher heights or higher lows. So that is how you determine your uptrend. And the same, since we've already determined that this is a downtrend, we've already plotted our lower lows, lower heights, lower low, lower heights. How do you now come up with your support and resistance line? There is your resistance line here will just be you linking all the lower highs, and your support lines here will just be you linking all the lower lows. So you just link this from here to here. You just link this from here to here, and you link these 2 points. You link this from here to here. As simple as that. As simple as that. You can see that is a downtrend. The market is bouncing there, that is a downtrend. The market is bouncing here, that is an uptrend. So that is how you identify any trend in the Forex market. And if any trend doesn't fall in these 2 categories, then that trend is a sideways trend, all right? It's a consolidating trend. It's a ranging trend. So those are all the 3 names mean the same thing: a ranging market, a consolidating market, or a sideways market. They all mean the same thing. So don't get yourself confused. All right. Good. Let's go to the next point. The 3 types of technical trends. Get me right before you quote me wrong somewhere, guys. Let me make this very clear. In Forex trading, we have 6 types of trends. 6 types of trends. Those trends are divided into 2 categories. Although anywhere, even from where I was studying, or from even when I was doing my backbone research in Forex, the only types of trend I saw were 3. They only just spoke about uptrend, downtrend, and sideways market or ranging market. But nobody ever spoke about momentum trends. I'm going to explain to you guys in a minute. Please just stay with me. Stay with me to the end, because I'm going to make it very, very clear and very understandable in a minute how you can be able to spot out all the 6 trends. So we have 6 trends in Forex trading. The first 3 trends are what we call technical trends. All right, technical trends. That means those trends are just caused by technicals. As simple as that. Those trends are caused by technicals. And then the last trends are what we call momentum trends. Those trends are caused by the strength in the market, by the strength, the power, the volume, the liquidity in the market. So that is why we call them, or that is why I call them. No, not we. I call those ones momentum trend. Let's start with the technical trend, the one everybody knows about, the one I'm sure you know about, right? So let's start with technical trends. Under technical trends, the first one is an uptrend. You can see here we have an uptrend. I already explained to you guys how an uptrend is formed. I don't need to go over it again. So the first one is just an uptrend where the market is bouncing from higher highs, higher lows, higher highs, higher lows. If you want to link your support and resistance, it's the same thing. You link all the higher lows, and you link all the highs, and you form your support and your resistance. Simple. You buy on your support. If it is an uptrend, you always look for buy signals. If it is a downtrend, you always look for sell signals. We're going to go into that in a matter of a minute. I'll show you how to trade support and resistance, or how to trade trending market. 80% of my solid, accurate, and sniper signals in Forex trading come from this type of market. Because once I'm able to trade this kind of market, all my risk to reward, what they call risk to reward, my risk to reward is always 1:3 and above. And I will show you that in a matter of a minute on the subsequent slide. So you can see that is an uptrend. We're talking about the 3 types of technical trends. That is an uptrend. The next one we have here is simple. The market is bouncing on lower highs, lower low, lower highs, lower low, lower low, lower highs, lower low, lower highs. And anytime you have lower low plus lower highs, it forms what? A downtrend. As simple as that. Lower lows plus lower highs, it form what they call a downtrend. And you can easily plot your support and resistance. Plotting your resistance or your support, you're just gonna link this point, and you link these 2 points. All right. So now this is the hypothetical explanation, and on a live chart, even though it's not just going to be straight like this, but you're going to use the same idea. Now we've already spoken about the first and the second one, which is the down and the uptrend. But now look at this guy. This guy is different from these two, and it is called a sideways market. You can either call it a sideways market, or you can call it a ranging market, or you can also call it a consolidating market. They all mean the same thing. So don't get confused when somebody come on live or come on a video and say, oh, today I was trading the consolidating market, or today the market has been consolidating, or today the market has been in a range, or it has been in a side. They all mean the same thing. They all just mean the market is bouncing on support and resistance. It's neither forming lower low, lower highs, or it's neither forming higher highs, higher lows. So that is the third type of technical trends. We've spoken about the 3 types of technical trends. Let's go now to the other 3 types of trend, which are the kind of trends are called momentum trends. These are the 3 types of momentum trends. Under momentum trends, you can see I like these trends a lot, because the day I discovered these trends, or the day I was able to figure this out, because I figured this out myself from trial by error, from blowing out a lot of accounts. I was able to figure this out. I was like, no, this is enough. I need to be able to figure out what is wrong. I know about all the 3 types of technical trends: uptrend, downtrend, sideways market. So since there are only 3 types of technical trends, and I'm trading those techniques, why am I still blowing my account? Why am I still having losing trade? Why is this thing not still working? That is why I started digging far. And by digging far, I also came out with the 30 I call this the 30 types of momentum trends. And the first type of momentum trend is what I call the long-term trend. All right, I'm going to explain this in a matter of a minute. Just stay with me. Let me just read them out, the 3 out, so that you can be enjoying it in the meantime. So here I have long-term trend. I also have intermediary trend, and I have short-term trend. Let me start with the long-term trend. Let me go this way so that you can see. Let me start with the long-term trend. On the long-term trend, anytime in Forex, I try and I catch one long-term trend. If in a month, Listen to this. If in a month I can cash just 4 long-term trends, it can make me millions. Just if I'm able to cash just 4 long-term trends in forex trading, whether in gold or any currency pair, if I'm using the 4-hour time frame or the daily time frame, and I'm able to cash 4 long-term trends, if I can cash 4, I can repeat this the whole day because this is what I use on a daily basis. If you've watched my live video, you will see if I can cash just 4 long-term trends in a month, that can make me millions. Why? You can see, and this is an example of a long-term trend. The reason why I call it a long-term trend, because you can see this is a persistent trend over a long period of time. Just imagine if this was a 4-hour time frame or a daily time frame, then from year to year it's almost like a month. Need to understand. Then from year to year, it's almost like a month. That is why I call this a long-term trend, because if you were buying, you know that, okay, sometimes I enter a trade, it's like stepping into the trade, then you keep adding on that trade. By the time you get out of that trade, you're getting out of the trade with about plus 600 pips. With about plus 600 pips. Guys, tell me what you can do with 600 pips in a month. 600 pips in a $10,000 account. 600 pips in a $10,000 account will just be 600 times 10. That's $6,000 just by technicals. All right. And if you are having, just imagine you're having a $100,000 account, that's 60% of your account. If you're having a $1,000 account, you're making $600. That is 60% of your account. All right, so you can see how crazy this system is, and $600 is even like the minimum. There's sometimes I used to stack. They call it stacking in the position. You can buy here as soon as the market goes here, test the support, comes back to go and test the resistance, come back to the support. I add to the position, then I shift my stop loss from the previous position. I put it, I break even at the current position. I keep trading the stop loss. By the time I go out of that trade, I'm having about 10 different positions, and they are all winning positions. I'll teach you more into that on our previous videos, on the videos coming. But on today's video, we are talking about trend trading. So please let's not derail from the point, all right? We're talking about trend trading. Good. So this is an example of what I call a long-term trend, because you can hold positions here. You can hold positions here for a longer period of time without the market changing the structure. So the main reason why I call it a long-term trend is because the market can hold that particular trend for a longer period of time without the structure being broken. As easy as that. So long as the same market trend can stay for a longer period of time before without being broken, you call that a long-term trend. And that is why we had this trend for a longer period of time without it being broken. Let's talk about the intermediary. All right, intermediary trend. You can see the trend started as what? As an uptrend. This is an uptrend. This is an uptrend. The trend started as an uptrend, right? As an uptrend. When the market got here, what happened? See what happened, guys. See what happened. When the market got here, the sellers came in. And anytime supply is more than demand. If I'm selling these pens and I have these pens more than the people want to buy this pen, what will happen? There will be what they call price dumping. There will be what they call dumping. And when there's dumping, that means I'm producing more than what people can buy. What will happen? The price will drop. The price of this pen will drop. The same thing happens in currencies. The same thing happens in Forex. So at this point in time, you can see sellers came in, pushed the market. Even here we had the higher height, but they break it. They can see this red line. The sellers break that particular line, push right down to form what we call the lower lows. So this was the first lower low that was happened. The first swing low. The first swing low that was that occurred here, because the market has been forming higher lows, higher highs, higher lows, higher highs. But at this level, the structure was broken. And when the structure was broken, you can see the market now changed the direction from an uptrend to a downtrend. You can see from year to year, this is now a downtrend of where the market is moving on from lower lows, lower heights, lower low, lower heights, lower low, lower height. That is what. Anytime you see lower low, lower heights, lower low, lower height, that is a typical downtrend. So I call it an intermediary trend because the market moved from an uptrend to a lower trend within that intermediary time period. All right. If this is a 4-hour time frame, then maybe within the week, within the week, the market was in an uptrend. Maybe by Wednesday, Thursday, you see now the market is now in a lower time frame. And the same strategies that you are using to trade on the uptrend are different from the strategies you'll be using to trade when the market is now on a downtrend. That is why knowing how to spot intermediary trends in the market is very, very important, because you become very dynamic, you become very swift, you can easily adapt when the market changes the direction, because you can't stop the market from changing the direction. But what you can change is being informed, because in forex trading, if you're not informed, you are totally deformed. So now you can see the market change the direction within that intermediary time period. That is why we call this an intermediary trend. Let's go to what we call short-term trend. This one is pretty self-explanatory. All right, this one is very, very self-explanatory. You can see within a shorter time period, the market moved from an uptrend to a downtrend to a consolidating market to an uptrend. So you can see within that short, all the trends here were short life, what I can call short-lived. All right, all the trends here were short-lived, because move from an uptrend to a downtrend, consolidation, uptrend within a shorter time period. So now, if you are not somebody who have knowledge about this, and you want to profit from this kind of market, the strategies you can use are scalping strategies. As simple as that. The strategies you can use here are scalping strategies. But now, starting from here, the strategies you can use here, you can use swing trading, where you even hold your position sometimes for even a week or a month. You can use swing trading positions here. You can use day trading strategies here to see trade here. But here, typically, you're going to be going with day trading strategies. You can use day trading strategies here. But here, typically, the high strategies you use to trade under short-term trends are what we call scalping strategies. All right? Because the market changed the trend, it's like the weather. When you thought maybe it was going to rain, the next minute it's already sunny. So now let's go to the next point. Guys. I don't want this to be too long. The next thing we have here is, what is the best forex trend indicator? So the best forex trend trading indicator is, let me get the drum, please. Let me get the drum. The answer is there's no indicator. If there was an indicator for the best trend trading indicator, then I wouldn't be here wasting my time. All right. So the reason why I'm here is to tell you that even if there's an indicator out there, I see people even go as far as buying trend indicators. Really, when the thing is clear like this. All those indicators are lacking. They have this property we call lacking property. That means before they even show you a signal, before they even show you that the market is going up, if you were somebody who knows how to follow the same principles I'm showing you here, you must have already seen ever since that the market is going up. Or before that indicator shows you that the market is changing direction or reversing, you must have seen ever since, using price action, using the same strategy that I'm showing you here, you must have seen ever since that the market has already changed direction. So there is no indicator, even moving averages. If you actually use my strategies that I'm teaching you here, you determine and you see that the market is going up. When you now put your moving average, what is exponential moving average, all those moving averages, I've used all those indicators. 90% of those indicators, I've used all of them, but I can tell you they all lagging. All right, they are lagging. So the best indicator to determine the trend direction is just price action. If it is an uptrend, it's going to be forming low. If it's an uptrend, it's going to be forming higher highs, higher lows, higher highs, higher lows. If it is a downtrend, it's going to be forming lower lows, lower highs, lower lows, lower highs, or swing lows, swing highs, swing lows, swing. As easy as that. Anytime you're able to spot that, see, for example, this chart, you can already just see. So the first thing you do when you see a chart like this, you try to determine the swing. You try to determine the swing levels. The first thing here, what I would have done here is I would have seen that, okay, this is what my high lows. This is my high lows. Let me look for a bigger pen. So I would have seen very clearly that this is what? This is higher lows. This is another. This is higher lows. This is my higher heights. This is my higher highs, then this is my higher lows. And based on the explanation I gave you earlier, if it is an uptrend, only look for buy signals, and if it is a downtrend, only look for sell signals. That is why you see here I bought here, I bought here, I bought here, and all the trade came in. By the end of the day, I came out with plus 300 pips. Even when I bought here, you can see this is what they call stagging. That means you're able to stag in position. All right. This is what they call stagging in positions. Oh, I don't know if it's stagging. I think it's something like this. Stacking in, or I don't know anything. Yeah, but this is it. So I bought here. By the time the market produced this thing is called a flag. So we'll come into this. There's a video coming that will also explain this particular pattern to you. So anytime I see a flag, I add into my position. Then I push my stop loss up. Immediately I saw another flag. This is another flag, because a flag is something like this. All right, this is how a flag looks like, and this is the same thing. This is how this pattern looks like. So anytime I see this particular flag pattern, what do? I add another position and I shift my stop loss to the next flag level. I come here again. You can see here I had another flag. I added another position. I push all my stop losses down to this level. The market came here, hit my take profit, and I was out of the trade with plus 300 pips. If I was using a $10,000 account and I'm using maybe 1.5 standard lot, that is already made more than $8,000, or going to $7,000 to $8,000. So trading is becoming a profitable forex trader. It's not magic, guys. It's just knowing what to do. It's just being confident. It's just being confident on yourself. To get to that particular level where we are today is just based on your confidence, based on you telling yourself that I'll do this thing, based on you telling yourself that no matter how this thing is difficult, I'm going to cross that bridge, and we're going to cross it together, guys. We're going to cross it together. Let's go to the next point, which is what I call trend strength. Because in forex trading, there is what they call a weak trend, and there's what they call a powerful trend. And a trend may start up it's like you starting a race, right? When you start a race, obviously you still have those calories. You still have the energy, so you can run faster. But now, by the end of the race, your energy is already dying down. So by that time, in forex trading, when you see the momentum start dying down, you need to be careful, because a reversal is very imminent. A reversal is coming anytime soon. So it's the same thing here. You can see the market started. You can see the market started here. You can see here we have our higher lows, we have our higher heights. It's the same thing. Higher lows, higher heights. Then this level didn't break, so now you can see we have now this is what they call a triangular pattern. All right, good. But from year to year, this is a 4-hour time frame, H4. All right, from year to year, for the market to move from a higher low to higher heights and back to higher low, this one took 25 days to complete. This one took 25 days. That means this one, to move from year to year, the whole of this guy, it took 25 days. But from year to year, it took just 10 days, and the market took a time when they came back within 25 days. Then within 10 days, this period here was 10 days. For the market to move from higher lows to higher height and back here was 10 days. Then for it to move from year to year was just 3 days. From year to year is 1 day. So it's like starting like this, and then you start seeing something like this. Be careful, because when you start seeing something like this, you might see now the market going on the opposite direction. It's the same thing here. See what happened. Sorry, I've wiped something I didn't want to wipe. So see what happened after this. Let me wipe this off. Good. So you see the momentum, after the momentum was almost dead here, and you saw this ranging over here. What happened? The market broke that particular support level, because this has been a support level. The market broke this particular level, then came here and had what we call a retest. All right, the market broke this level, then came here, had a retest and changed direction. So instead of the market being in an uptrend, you see we had now a downtrend. And when now we had a downtrend, what happened? The market peak momentum now in the opposite direction immediately. So see, the market moved from 25 days, 10 days, 3 days, 1 day. And then after that, it started now picking up. It moved from 1 day, 3 days, 10 days, 15 days. It's like you throw a stone, it gets to a particular level and then die off, then change direction now in the opposite. The same thing happens in Forex. Because at this particular level, what happened? More sellers came in. And more sellers came in due to the battle between buyers and sellers at this particular level. If sellers actually win the battle, then the market will be able to fall at with a very high strength. That is why the strength of the market in the opposite direction will be very, 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 very powerful. And if you are setting your target at this level, remember, this is now a downtrend, and you're going to only be looking for what? Sell signals. If you have to sell here, the market will come bounce here. You can add another position. You can bounce here. You add another position here. By the end of the day, you see, it's like you're gathering everything. You're picking up the pips on the way. As the market is going, you're picking up the pips on the way, and you're managing your positions. At the end of the day, it's like you just gather everything and you're out of the market. You gather all the pips and you're out of the market in one big chunk. It's the same thing. It's the same thing. Change of direction, and you're able to spot the change of direction. And the strategy we would have used here is break and retest. Break and retest. The structure was broken. Then a retest here. Immediately a retest here, we would have sold here. We would have looked for a signal. Maybe our confirmation we'll be looking for a candlestick confirmation. Once we get a candlestick confirmation at this level, then we sell. The strategy is what? Break and retest. Break and retest. Then we get into the trade. So that is what we call trend strength. You should be able to know when the trend is down, when the strength of the trend is down off. You should be able to know when the trend doesn't have any momentum again. You should be able to know when the trend can't go anywhere again. Because see the momentum, you can see how the trend pick up here. Very high momentum, was kicking from high lows to high heights. Within days, it took days from it, but now the trend started dying off. So if you are somebody who is a very conservative and is somebody who knows about risk management, so long as you see the trend start dying down, you need to start tightening up your stops. You need to start tightening up your stop losses, because the market can change the direction at that point in time. Remember, trading is a game of probability. Nobody knows for certain when the trend is going to change. Nobody knows for certain how long the trend is going to hold. All right, I can be trading the United States dollar, Japanese yen, and maybe a disaster or maybe a natural disaster happens in the United States. Maybe they have an earthquake. That will automatically still affect the United States dollar because the economy is working. A disaster has happened in the economy. And if I was trading that currency pair, it's going to affect my decision immediately without me even knowing. So I might see the trend going up and everything is rosy, and I place my position, I have no stop loss, and I'm bouncing around. I'm even going around doing car shopping because I know there's money on the way. Not knowing that the next point I'm turning my face, I'll see my account on zero. Why? Because anything can happen in Forex trading at any time. So you have to be ready. Anytime you place a trade, you have to consider that money gone, so that the psychological aspect of trading won't beat you to a beat. So now let's go to the next point. Which is how to identify a trend reversal. Simple. I won't waste time on this one. I already explained to you guys. You guys need to be able to spot. You need to be able to win. You need to be able to easily capture a change in structure. A change. That's what I say. When there is a change in structure, this is the most important thing. So long as you see a change in structure, it means the market is changing. If the market was bouncing like this, making higher lows, higher heights, right? Higher lows, higher heights. Then after some time, you see the market comes down and do this. If this one now comes up now and didn't break this level, so long as this level is not broken, what is it forming? It is forming now a lower height. So long as you see now a lower high popping up, that is what a change in structure. Anytime there's a change in structure now, the market direction has already changed. There's already a reversal. I don't need an indicator to put in my chart to start telling me that, okay, let me put the moving average, the period 50, then the period 70, this one on the red line, this one on blue line. When the red line closes this, I don't need all that BS to come and tell me the market. So long as the structure is broken, so long as the structure has changed, the market, the direction is already changed. As simple as that. So you can see here very clearly. Break, retest. This happens all the time. The structure was broken here, came back here, retest. Now it's a confirmation of a downtrend. You should always be looking for now sell signals at this point in time. So now that is how you are able to easily identify trend reversal. And then when there is a change in momentum, I've already explained about a change in momentum, where now you see the market stamp up like this, and then you start seeing something like this. Be very, very careful when you see momentum in the market. You can see momentum in the market, then you start seeing something like this. Momentum is dying off. The buyers, if the market was in an uptrend, the buyers don't have power again. They've already taken they've already done what they had to do, and they don't have the strength again. It's like you getting to a particular age where you can't perform the same duties you used to perform when you used to be 18 or when you used to be 10 years old. It's the same thing in Forex trading. It's the same thing in the market. The market started with a lot of momentum. You could play soccer, you could play basketball, but now you start getting to your 80s, you can't do most of those things. It's the same thing in trading. Momentum is already dying off. The power is already gone. The strength is already weakening. What happened? You should expect a change in direction. All right, and if you are human, you should expect to die even. You should start thinking of dying anytime soon. So it's the same thing in Forex. The momentum is already dying off. The strength in the market is already weakening. You should expect a change in direction. That's why you now see something like this. Boom, the market will change direction. So that is how you can easily identify trend reversals in Forex trading. First thing, when there is a change in structure. Then when there is a change in momentum. When there's a change in momentum, that is how you easily identify, okay, the market might be changing anytime soon. The market direction might be changing anytime soon. Those are the two most powerful things you use to determine the change in direction. Now let's talk about tips on how to trade trends. All right, tips on how to trade trends, because like I said, trend trading is so nice. If you know how to trade a trend, most of the signals you get on trend trading, you get a risk to rate of at least 1:3. I'm not kidding about this one, and I'm going to show you examples live trading on MT5 after this. So they say tips on how to trade the trend. Number one, always trade in the dark. This is the highest thing I wanted to emphasize. Always trade in the direction of the trend. In the direction of the trend. That is why you hear the term in Forex trading everywhere. They say the trend is your friend. The trend is your friend. They didn't say the opposite trend is your friend. Trading in the opposite direction of the trend is like trying to catch a falling knife. Like the knife is falling and you're trying to catch that knife. It's going to pierce you. It's going to wound you. It's going to cut you into pieces. It's the same thing in Forex. You don't try to trade against the trend. You go with the flow. If the buyers are in control, then just join the flow. All right? They say if you can't win them, then join them. Or if you can't beat them, join them. So it's the same thing in Forex trading. If the buyers are in control, join the flow. Only look for buy signals. And if the buyers are in control, the market is going to be in an uptrend. Once the market is in an uptrend, only look for buy signals. If now the trend has changed direction and it is going down, and okay, if it's going down, it means the sellers are in control. Only look for sell signals. Only look for sell position. Only take sell positions. I can't emphasize this enough. All right, I can't emphasize this enough. Okay, and then the second point, they say be keen enough. I don't know if this is spelling of keen better. So be keen enough. Be keen enough to know when the trend is dying off. This is very, very important. So as a trend trader, you should be very keen enough to know when that trend in the market is dying off, to know when the power in that trend is finishing, when the momentum in that trend can't push the trend any longer. You should be very keen enough to easily spot that. For example, I mentioned if you see the market going up, then you start seeing something like this. This which forming here is telling you, this triangular pattern is telling you the market might be changing direction anytime soon. So also be careful of that. Then always use proper risk management, since the future of trend is not certain and the price can change at any time. So trading with the trend, always use proper risk management. Always use your stop losses. Always preserve your capital. They say it's not how much you make in Forex, but how much you can protect or how much you can keep. All right, and that money is not yours until it is in your bank account. The money, you can be making $10,000, the next second it goes to zero. It is not yours until it is in your bank account, because anything can happen the next minute. You don't know what is going to happen in Japan. You don't know what is going to happen in UK. You don't know what is going to happen in Canada, because you are trading those currencies. And if anything happens there, it is going to automatically affect those currencies. So protect yourself by protecting your positions. All right? Protect yourself by protecting your position. So those are the points you need to consider when trading the trend. So with that being said, let me see what we have here. Okay, live chat. Let me show you a couple of examples, maybe just one or two examples on MT4 or on MT5, and we'll call this a video. So let me just get into my MT5 and I'll show you these examples. Okay, good. So you can see here we are on MT5, right? This is MT5. You can see this is MT5. So, and this is a live chart. This is USD Japanese yen, and we have a live chart here. You can see on my left, those are prices changing. It's a live chart, and I'm going to show you the same thing I'm explaining on a live chart. Let's start with how to determine the trend. So just seeing this, let's just assume these two lines are not even there. Just seeing this, I start by plotting my levels. I start by plotting my high highs, high lows, or lower highs to determine if this is an uptrend or downtrend. And from the way I can see, the market sloping up, I can already know that, okay, from this point, I'll have what we call my higher lows here, higher lows, higher heights. You see, higher lows, higher heights. I'll have again higher lows here. I'll have higher heights here. I'll have higher lows here. I'll have higher heights here. And anytime you see, anytime you start seeing higher heights plus higher lows, what's that? That is an uptrend. As simple as that. Anytime you start seeing higher heights plus higher lows, it gives you what? An uptrend. As simple as that, as simple as that. That is why, and for you to link your support, even if these two lines were not there, for you to draw your support and resistance, this is my support, and this is my resistance. All right, and that's my resistance. And for you to link, to draw your support and resistance, you just link all the higher, to draw the support line, you just link all the higher lows. You link from higher low, higher low, higher low. So I'll link from here, I pass through another higher low, then I go to another higher low. I pick, that's already my support. The same thing will happen to my resistance. I just link all the higher heights. It will form my resistance. Now I'm only trading. I'm only looking for buy signals. This is the only place I'll buy. When the market comes here, I'll buy somewhere here. All right, I'll buy here. If I buy here, where will my take profit go? My take profit will go to the next resistance. So my take profit will go somewhere here, and my stop loss will go somewhere. So if I'm risking 25 pips here, I'll be going for at least 75 pips. That is a risk to reward of at least 1:3. All right. So the market came again. See what happened. See what happened. The market came again somewhere here. I would have bought somewhere here, put my stop loss somewhere here, and my take profit on the next resistance, my take profit somewhere here. And what happened? Boom. The market went there. My stop loss here. That is a risk to reward of about 1:5. So if I was risking $100, I'll be going out with $500. If I was risking $1,000, I'll be going out with $5,000. If I was risking $1, I'll be going out with $5. Tell me how you can make money in forex trading if you have this kind of ridiculous risk to reward. So even if I'm right just 30% of the time, so even out of 10 trades, I have just three of those trades winners. I'll still be profitable at the end of the day. Because something is very, very clear, something is very eminent in forex trading. You must have losers. You're going to have losing trades, all right? But now, how big are your winners? How big are your winners? That is what makes you a profitable forex trader at the end of the day. When your winners are bigger than your losers, not when your winners are more than your losers. Because your winners can be more than your losers, and you still come out as a loser at the end of the day. Just imagine you have trades that risk to reward is maybe 1:0.5. That means for every $1 you risk, you are going for maybe $0.5. It means even if you have 80% accuracy, that's why I see some of these people on the internet, on YouTube, Google, wherever, they give you signals, and the main thing that they're targeting, they want those signals to have winning rate. They want those signals to have high win rate. They want those signals to have maybe 90% win rate. That's okay. I just hit my TP. I just hit my take profit. When somebody just come up to me and they say, I just hit my take, the first question I ask you is, what is your risk to reward? That is the first question. What is your risk to reward? How much are you getting, or how much are you risking to have what you're having? If you're having a risk to reward of maybe just 1:1, don't even talk to me, because you're a loser. We don't even need to talk for 5 minutes before I know that you're a loser. If you're having a risk to reward of at least, your risk to reward should be at least 1:2. That means for every $1 you risk, if the trade goes your way, you should have at least $2. That is when, if you are able to do that, trust me guys, you'll be a profitable trader. You'll make that money in Forex trading. But if you see somebody, maybe you join Signal's group, you see every minute, say, okay, I just hit my take profit. Or somebody give you a signal and they give you about 5 different take profit levels. T1, T2, T this. Every minute they say, okay, my take profit is hit. My take profit is hit. But when you check, their risk to reward is 1:1. 1:0.5. That is how at the end of the day you still be a loser. Even though you are taking signals and you are every moment you are hitting take profit, you still come out a loser. That is just mathematics. That is just finance. That is just accounting. You still come out a loser. So that is just that. You can see on a live chat. That is the same example. That is the same example. And if the market is going up, what I will see, I'm only looking for buy trade. Even if the market comes back to resistance, I don't care what will happen. I'll wait for the market to come back to the support, and I look for another buy trade. If the market is in the uptrend, only take buy signals. All right. So let's keep going. Let's keep going. So if I keep screwing and going, see what happened. Can you see what's happening? This is what the market is still continuing. The market came here again and formed what? And formed what? Higher lows. The same point. The market came here again and formed higher lows. Came here, break somewhere here. This is the point where the market break the resistance. Do you see why I said you should only take trade in the direction of the trend? You should only take the trade in the direction of the trend. The trend is your friend. See what happened. The market has been in an uptrend ever since I started explaining. The market has been in an uptrend. The market came here, you would have bought again. You would have bought again somewhere here. All right, you buy again here, and you take profit somewhere here. TP somewhere here, stop loss here. This one is a risk to reward of at least 1:6. That means for every $1 you are risking here, you would have made $6. For every $100 you are risking here, you would have made $600. And the trade within 1 or 3 days. This is a 4-hour time frame. 4-hour time frame. Within 3 days, your take profit was already hit. See why I said only trade in the direction of the trend. The take profit was hit. By this time, you would have already gotten out of the trade, and you're waiting for the market to pull back to this level. But see what happened. The trend was broken. The trend was broken, and the market continued going up. All right. Since the trend was broken, what would have happened? What would have happened is you would have now waited. You would have now waited because you see this level is going. You would have now waited for the market to come back, retest that particular resistance. This is what they call a change in structure. What was your previous resistance becomes a support. All right, because now this one now becomes a support because the market broke that resistance, came back. The market broke, went up, then came back and retest. You would have now bought somewhere here. You would have now bought somewhere here because now this one has become the resistance has become the support. All right, that is what they call a change in structure, a change in market structure, where a support can become a resistance and the resistance can become a support. So let's keep going up and see what happens to this chart. You can see the market keeps going up. The markets keep going up. And even at this level now, the structure. So you see, if you keep just plotting and going, at this level, let's just take one last example. Let's just take one last example. At this level, you could see we have our higher height, our higher low somewhere here. Our high low somewhere here. We have our high height somewhere here. Our high low somewhere here. Higher height somewhere here. Higher low somewhere here, higher height somewhere here. And how do you plot your support and resistance? You link all the points. That would have been my support. You link all the points. That would have been my resistance. Simple. As simple as that. Can you see how the market was testing? It was still in an uptrend. I would have bought somewhere here. Bought somewhere here. Bought somewhere here. My take profit on the next resistance. My stop loss a few pips above my current low. And remember, I used to call this my support zone. So my stop loss should go somewhere here to prevent what they call stop loss hunting. My stop loss will go somewhere here. My stop loss will go somewhere here. The least I'll have here will be a risk to reward of 1:4. The least will be a risk to reward of at least 1:4. So that is an example on an uptrend. On an uptrend, if you keep just pushing the same chart and going, just pushing the same chart, you can see there we have a typical downtrend. That is a typical downtrend. I don't even need to look and go far. You can see here we had a typical downtrend. What is a downtrend? Here we had our higher, we had our lower height, lower low, lower. We had again lower height. You see. So here you see we had our lower heights, lower low, lower heights, lower, lower, low. And anytime you are seeing this, what is that? That is a downtrend. You see. So guys, I hope you've been able to pick something from this video. Remember, we're talking about trend trading. So by the end of this video, these are the few things you should be able to take away. You should be able to know what is a trend. What is a trend? We've already defined a trend, a situation where the price is moving in a specific direction over a specific time period. It can be an uptrend, downtrend, sideways, or whatsoever. So you need to know what is a trend, what are different types of trend, and also remember the ones I've been able to introduce today, the ones you've never seen anywhere, and the ones you never see any other place, all right? And those are momentum trends. They're very powerful. So you need to also know about that. Then know how to determine, how to even identify trends. You might know of trends, but how do you identify trends? You should know how to identify trends. You should also know how to trade trends. I've also taught you on how to trade trends, where you can put your stop loss, where you can put your target, how to calculate your risk to reward. You should also know that. Then you should also know how to spot what we call reversals. How can you spot the reversals using trend? How can you see that the momentum is dying off? That is something you should be able to know by the end of this video. Then you should be able to also get all these tips and be able to see how we did everything on a live chart. So with that being said, we've come to the end of this video. If you've gotten some values from this video, please leave a thumb up on the video. Leave a thumb up on the video. It's going to mean a lot to this channel. And if you're watching and you haven't subscribed, please hit the subscribe button below to subscribe to the channel. And then recently, as we hit 10,000 subscribers, you can see somewhere on the channel or maybe on the video description or somewhere, there's something they call channel membership. So that is a YouTube feature when you hit 10,000 subscribers and above. And it has some levels that can enable you to be able to have some extra benefits from the channel. So if you want to just support the channel, or you want one-on-one mentorship from me, or you want something like that, you can always check out those levels. Also check out the Telegram channel on the video description. I have a Telegram channel, the Telegram channel of Forex traders sharing ideas on a daily basis. So if you want to be in a community of Forex traders that share ideas on a daily basis, then also check that Telegram channel on the video description. Then you might know how to trade, you might know how to do all these things, how to draw support and resistance, how to come out with this level. But if you don't have the best broker, trust me, you won't make any money in Forex trading. So also on the video description, there's a link of the best Forex brokers that I've been using for years, that I've been able to use to make millions. So go on that list and pick the best Forex broker, and make sure you sign up with the best Forex broker and also trade with the best tools. So with that being said, guys, stay profitable, stay happy, and I will see you guys on another live video. Peace.